Guys, what if we could have a live tool to see exactly what the largest whales of Rollbit are doing every single day, how much they're buying and selling and why they are doing so, and how can we front run that. Now, if you're interested in that, you came to the exact correct place, because in this video, I'm gonna share with you the tool that I've developed that has already helped me have really awesome trading activity with Rollbit. I'm gonna explain to you exactly who these wallets are and what exactly are they doing and what are their intention. And how can we, as retail, front run them every single time, all the way to the 10,000x that Rollbit is, in my opinion, headed at by the end of the next bull run. So let's start the video with explaining who these wallets are, what exactly are they doing, and why are they so exceptionally important to anything that Rollbit is doing on chain. Okay, so guys, we're gonna look at wallets that they are actually the market makers of Rollbit on Uniswap. Okay, and they account for more than almost 10% of the total volume on Uniswap. So who are market makers and why are they so important? Market makers are liquidity service providers that hold a large amount of the two traded tokens such as Rollbit and USD stablecoins like USDT and USDC. They normally use bots that buy and sell back and forth and provide the market participants the liquidity for Rollbit and USD once they need it. They would normally counteract the organic market to provide a balance to the price action of the token. So for example, as you can see, when the price over here, which is the blue line, when it's going much higher, they counteract it. They sell a lot more than they buy, and they start creating this major top. So when market participants are buying, they use the opportunity to sell and reduce the volatility. When market participants are selling, they support the price and create bottoms. They normally would have a high percentage of the total market volume, like we've mentioned, and they will not always support the price. This is important to know. They normally do this strategically at critical price points based on technical analysis. Okay, so for example, this last example over here, when they supported quite heavy, okay, on September 26th, as you can see, they almost didn't sell anything and they bought quite a lot over here. As you can see, this was the exact September 26th bottom when Rollbit dipped below 10 cents. So over here, they protected the price very heavily, created the bottom, and off to the races we went once again. So as you guys understand, they are exceptionally pivotal to anything that happens to Rollbit. Okay, now if you're interested, just to check in the description below, I'm gonna also link these three wallets, that these are the market making wallets that I've identified in my on-chain research. If you want to analyze them further, you're very welcome to do that. Now lastly, as of the date that I'm recording the video, they have a combined $13 million profit on their Rollbit and USD trading on Uniswap. That is more than double than the next most profitable wallets. Okay, so I have here another table of the most profitable wallets on Rollbit. So as you can see, number one here is 6 million, but that's because the market makers, they are combined here. There are three wallets, as we mentioned, that they are over here, and their combined selling was $13 million, which, as we said, double than the 6.5 that the largest next seller did. So now, guys, that you know who market makers are and why are they so pivotal in anything that's happening to the Rollbit token on Uniswap, let's understand exactly how to front run those whales, okay? Because this is gonna be super easy for retail to front run them, because these guys are trading lots of volume. As you can see, they are trading millions during one day, okay? And they cannot really go, like, they cannot sell or buy too much, okay, of their money. But if anybody has like $5,000 or $10,000 or $1,000 worth of trades to do, you can front run them easily, because they are the ones that are moving the price, and you can just front run them before they are doing so. Okay, so now let's understand how to front run the whales and how to use the charts that we have over here. So first of all, let's explain the charts that we have. The first chart is the most important chart for the front running tool that we have, because this is the exact volume that these market makers are doing, okay, overlaid with the price action of Rollbit. So the blue line here is the price action, the red is the amount that they sold, and the green is the Rollbit amount that they bought on every single day. This is going to be the most important tool to front run the whales. Then the secondary supplementary tool that we're going to use, this is the percentage of the tokens that they bought or sold on any given day. Okay, so for example, here on August 3rd, you can see that they sold 65% and they bought 35%. So when we come back here on August 3rd, you can see that these are the percentages more or less, 65% and 35%. We're gonna use that as a supplementary to the information that we have over here. Then the last two things that I have over here, they are not necessarily important to front run, but they can just give you some extra knowledge and extra edge. Okay, so the first thing is the top on-chain traders on Ethereum for Rollbit. Okay, and exactly how much did they profit. Okay, and they are also sorted with the most amount of profit to the least amount of profit. You have here 500 of the most basically profitable wallets on Uniswap trades for Rollbit. Okay, this is the first thing. And then over here you can just see again the market makers wallets, exactly how much did they sell as the time goes on. Okay, so by July 6th, for example, they only sold $1 million. Then by July 20, as you can see, also the price went higher. They sold a lot more and they got to 5 million. Then another major spike over here. They sold almost 10 million and so on. As you can see, every time the price is going higher, you see they are taking profit on the retail, okay, on the market. So this is why anybody, any retail that is watching this video, I want you guys to succeed against those guys, because these guys are literally taking money from the retail right now. This is the opportunity. With this video, hopefully we'll do the best we can over here to explain how the retail can win in this game against the market makers. Now, obviously not everybody is going to be able to win, but hopefully whoever watches this video will. So without further ado, let's finally get to the how to use this chart. Okay, so we have four major important stages, okay, that are happening every single time in this chart. Okay, the first one is an impending sell signal, meaning we are getting close to a top and soon it's gonna be a good time to sell. Then there's the immediate sell signal. This is like now is the time to sell. So either we already had the top or this is exactly the top right now. So likely we should be selling already. So this is the immediate sell signal. Then the next one is the impending buy signal, okay, meaning that finally we should be ready to buy. And I should also leave a little bit of a note. Sometimes you can, in my opinion, it is also okay to start buying even in this stage of the impending. But if you haven't, then you have the immediate buy signal, meaning that likely the price is gonna leave the station very soon, and likely the price is gonna get higher very, very soon. Okay, so these are the four stages. Now let's explain every single stage, and I'll give you a few examples of how every single stage looked like and how it's gonna look like in the future, so that we can identify the exact stage of what's happening. Okay, so the first one, as we said, is the impending sell signal. In the impending sell signal, what we're having is a major increase in volume, but in addition also an expanding sell percentage, meaning these market makers are selling more than they're buying, but they also have a much higher volume. Okay, so we have a few examples here. Let's have a look on July 17th and 18th, and I just already know that this is going to be this. Why? Because as we can see, we had a major volume spike by the market makers. So we see this major volume spike, we understand, okay, that could be an impending sell signal. Then the second thing that we just need to double check with our second tool over here is that we look, okay, July 17th, major volume spike did occur, check. Let's have a look if the selling is higher. Now we can obviously see it already here, which is $1,400,000 sold against $400,000 bought. But if you want to see the exact percentages, you can just go over here and see, okay, they sold 77%. So we have our impending sell signal going on in July 17th and 18th. And if we look at the price of what happened here exactly, we can see again that the price didn't really exactly top over here, but it was very close. It was at 10 cents when the top was 12 cents. Okay, now this was example number one. Let's have a look on another example, which was between August 8th and 10th. And as you may guess, where could it be? Of course, at the major volume spike over here, August 8th. Okay, so once again we had a much lower volume and then this major spike once again. So we see again impending sell signal, increasing volume. Yes, we have the increasing volume. Let's have a look. Let's cross-reference with the percentage of the tokens sold. Again, August 8, we can see in the amount of tokens, 1,700,000 is a lot higher than 700,000. This could be enough, but if you're interested, you can see also here, August 8, they were selling 69% of their tokens, more than they were buying, okay? So once again, you have a confirmation of increasing volume plus expanding sell percentage. So you know that we are in the impending sell signal stage. Now let's get to stage number 2, which is immediate sell signal, okay? Meaning that either the price has already topped or it is the exact top now, and it's smart to act very soon, okay? So immediate sell signal, it happening shortly after the impending sell signal already occurred, and the buy to sell ratio is getting back to around 50-50. It doesn't have to be exactly 50-50. It could be 59% to 41%, but it's just generally a lot closer to 50-50 than it was before that. So let's have a look on another few examples so that we understand it a lot better. So these are the examples for the immediate sell signal. As we can see, shortly after that first top over here, we had the immediate sell signal, which was July 19th until July 20. Okay, so these were these 2 days. So as you can see, July 19th was the exact top, and then July 20th was actually after the top, but as you can see, the price was still 10 cents, much higher than the bottom at 6 cents that Rollbit had at the time. Okay, so and what exactly happened here? Okay, so we did have the impending sell signal, much higher volume, much higher selling, okay, July 18th, July 17th, but then July 19th and 20th, that was our immediate sell signal. So let's have a look what happened in July 19th and 20. So as you can see over here, the percentage between the buying and the selling by the market maker whales got much closer to 50-50, okay? So in the prior 2 days, it was at 77% and 69%. Then the sell reduced here to 54%, much closer to 50. Then on the secondary date, it got to 52%, okay? So that was the immediate sell signal. We can see also with the price, that the price kept going a lot lower. And you can see that basically they started buying a lot more. So so that you guys understand exactly what is happening, it means that when they are selling a lot heavier, it means that the organic market participants are buying so heavily that they are confident that they can sell so much. But then once like the market strength is not as strong anymore, they know that, okay, they have algorithmics and they are a lot more advanced than the retail, okay? So this is why we need tools like this to combat them. They see that the organic activity is diminishing in terms of buying, and this is why they just start to sell not as much. So as you can see, the red bar charts here are diminishing and the green ones are increasing because they understand they cannot sell as much and they don't want the price to collapse too heavily. So this is why they are starting to support the price, and this is why you have like the 50-50 situation starting to happen. So that was an example number 1 for the immediate sell signal. As we said, the buy and sell ratio is getting to 50-50 or something close. Now let's have a look on our secondary example on that major top we've had for Rollbit, okay? So as we've had the impending sell signal between August 8th until the 10th, okay? Then we had the immediate sell signal between August 11th until the 13th, okay? So as you can see, 11th and 12th was the very top of Rollbit at 19 cents. Then, August 13th was already kind of heading lower, right? But eventually the price went even much lower than that. Let's have a look again on August 8th until August 13th, okay? So August 8th, they were liquidating heavily once again, 69%, 67%, 78%. And then, as we said, from August 11th, 12th, and 13th, you see 11th, it was still 61%, but you can see it was a drop from how much they were selling before. And then 12th and 13th was a really strong sell signal, okay? Because this time they were even buying more than they were selling. Okay, so let's have a look over here. After they were selling very heavily into the strength of the market, heading to the 20 cents region, okay, over here, they started to sense from the organic market that it's not as strong anymore and they cannot sell as heavily as they did over here. So they start to buy a lot more, okay? So from August 11th until the 13th, you can see primarily on the 12th and the 13th, they bought even more than they sold. But the price still headed lower because, again, they sense what the organic market is doing. So this is why we have to front run them in advance. So this was the immediate sell signal, okay? Now let's have a look on stage number 3, which is the impending buy signal, okay? So after we've had the two of those, okay, after the price already dipped, we have a significant volume reduction after the price correction. And the buy and sell ratio also close to 50-50 once again. So let's have a look on a few examples. So we have example number 1 here between July 24th until July 29th, okay? So as we saw in July here, we had an impending sell signal here, immediate sell signal, and then look at this major volume reduction, okay? So once you see that, you know, okay, this could be an impending buy signal because they start to become a lot less active, the market maker wallets, okay? And then generally you had like 5 days of this impending buy signal, okay? And as you can see also the chart, the blue here also kind of consolidated, right? It didn't like drop much and it didn't increase much. So it was a very good consolidation area, okay? So the volume decreased, but also what was the other thing that we needed to look for? We needed to look for the buy and sell ratio going close to 50-50 again. So this was July 24th and 29th, okay? So let's have a look. Over here, the price diminished a lot, okay? And as we can see, the percentage was around 50-50 once again here in July 24th. But then particularly in this case, look at something interesting. In July 25th, they still sold a lot more, okay? So this is why we had to be cautious. But then we had once again 2 more days that it was again very close to 50-50. So just because generally the volume was here a lot lower, and for the majority of the days it was at 50-50 between buy and sell, that means it was the impending buy signal, okay? Now guys, let's get to the 4th and most interesting stage, of course, which is the immediate buy signal, meaning that the market makers are likely to drive the price a lot higher, okay? So after the price consolidated for a few days, we start to see the buy and sell ratio getting to 60-40 in favor of the buying, okay? So this occurred in July 30 and July 31st over here. So let's have a look, okay? As we saw, the price consolidated, the volume was a lot lower, but look at this. Then July 30th, bam, you have this major spike of almost $500,000 that these guys are buying, okay, out of nowhere. Then July 31st, once again, they are still buying quite heavily. As you can see, it wasn't like an exact bottom indicator, right? But it was very close to the bottom. Like the price was between 6, 7 to 8 cents, and eventually it went to 20 cents. Okay, so even if somebody used the immediate buy signal here on July 30, when the price was still 8 cents, right? Eventually the price did go to 20 cents anyway. So what happened here, as we can see, we had a lot more token buys by the market maker, and again we could correlate it over here. Look how the red was much more dominant over here, but then during these 2 days we had token buys that were 60% or higher on July 30 and July 31st, and surely enough, very soon the price did get to new highs, okay, and even broke the all-time high that it had prior over here. Now lastly guys, I guess I want to show you the last example, okay, of what happened most recently, what I did, okay? So most recently using this tool, and before I published it in the internet, of course I wanted to verify that it's working properly for me. So most recently I bought on this exact immediate buy signal that I had here in September 26th, okay? So before that we had the impending buy signal happening between September 21st and 25th, and I was ready to buy. So I was waiting for that immediate buy signal for me in order to buy. So let's have a look exactly what happened on September 26th, okay? So here's the September 26th. Prior to that, as you can see, once again, the volume was a lot lower than what was happening over here, okay? So over here, they were actually supporting the price, as you can see, and they were buying more, but with a very high volume, okay? And the price kept going down. We're gonna get to this very soon. I'm gonna explain also what happened over here as well. But how did I understand that I'm gonna have an immediate buy signal? So I had a major reduction once again in the volume, okay, which showed me the impending buy signal, okay? And then On September 26th, as you can see, the green bar over here became a lot higher. Okay, so September 26th here, they bought $400,000 and sold $100,000. And also over here, look like how like the red was dominant, and then bam, like they buy 75%. After, again, the volume by them was very low. So this is what showed me the immediate buy signal once again. And this is why I bought over here. Actually, this time it was pretty close to the bottom. Again, like in July, it's not necessarily gonna be the exact bottom. And I didn't really catch like the absolute bottom of 9 cents. I missed that. But I did buy here at like 10.5. So I mean, it was still pretty good for me. And as you guys maybe already can see, because like the selling by them was already so high, it looks to me that we could be already in the impending sell signal. So I mean, I already kind of front ran my own stuff here, and maybe actually the price will get slightly higher. But I mean, I think we're right now, as I'm recording the video, that we are actually in the impending sell signal already. So this is why I front ran myself, and because I was kind of lucky to catch almost the bottom. And you know, like I had a profit of almost 50% in a few days. I just already, you know, took the profit, and I'm happy with what this tool already gave me. So these were the 4 stages, and this is exactly how I used it the last time in September 26th. Now, I want to give you some last bits of information and insight so that you can understand the market makers a little bit better, and also understand like what happened, for example, over here, and how to not fall into false traps in a way, okay? So I want to explain over here, extra information and insights. There was a special case between July 13th until 16th. Between July 13th until the 16th, the market makers liquidated heavily on the all-time high break of 6 cents. Probably because the organic market led the price appreciation, and they wanted to sell into this strength so that they can create a wall of support and not allow the price to go below 6 cents again, which they did much later in July 30 to 31st. So what exactly am I trying to explain over here? I want to reiterate that in the video as well, okay? So I just want to show you here, like, as you can see, July 13th and 16th, you can see that they were selling super heavily here. So you may think, oh, like this could be an impending sell signal. But why over here? Sometimes we have to be very cautious and just understand what the market makers could intend to do, okay? So I just want to explain something very important, okay? So when it comes to technical analysis, okay, the 6 cents region here in July 13th was super important because the all-time high for Rollbit from many months ago was at 6 cents. Now over here, they were breaking the all-time highs. Now, what do the market makers want to do? Because again, remember that at the end of the day, their main goal, okay, is to balance everything that's happening so that the price doesn't like become exceptionally volatile. That's the thing number one they want to do. But also, market makers want to have the token keep going higher and higher over time. That's their secondary goal. And then their third goal is to liquidate as much as possible as the price is going higher. Because as you can see, every time the price is going a lot higher, they just liquidate a lot more. Also, once again, a new all-time high here, you can see how much they liquidate. And here, for example, when the price is going lower, you can see they don't liquidate much, right? So basically, the token that is going higher and higher, they just have a lot more profits and profits. So of course, they would want the token to keep going higher. So you gotta remember, this is what they want, okay? And again, they're exceptionally savvy traders that are basically controlling what's happening with Rollbit. So this is why they are very smart with what they're doing. My personal interpretation of what happened on July 13th is that they just broke the all-time high, and they just saw that probably the organic market was able to push above the price of 6 cents, so they actually wanted to liquidate, okay, to sell a lot of Rollbit at this price of 6 to 8 cents because the organic market was strong enough to push that, okay? But then, as you can see, they came back to support so that the price kind of can keep going higher, okay? So over here, they kept supporting the price, right? Like over here, they didn't buy almost anything, but over here, they came back to buy, almost 50-50 over here. And then the price kept going higher. And then much later, once the price got again to pretty close here to 6 cents, look at those wicks. Okay, just guess who was responsible for this wicks and kind of supporting so heavily? Probably these market makers. Okay, obviously maybe some organic market participants, but primarily these market maker wallets. Okay, so every time they made these major wicks, and every time the price got closer to 6 cents and breaking that prior all-time high from February, they were supporting that heavily because they already sold a lot of tokens at these prices, and they had all of these stable coins to support the price once again. So this is just my personal interpretation of what happened between those dates. If you're gonna analyze that and scratch your head, oh wait, like this was an impending sell signal, not exactly, because of the particular situation that occurred here. The second thing that I want to show is the increased volume that happened in a downtrend over here. Okay, so when we have an increased volume during a downtrend, okay, that means the organic selling is very high, or the organic from the market participants, right, is very high. So the market makers are actually supporting to avoid capitulation and a major collapse in price. So the examples that occurred was September 11th over here, and then 18th and 20th. Why do I want to show that? I just want to explain that, like, once we have a major increase in volume, if that happens during a downtrend, it does not mean that this is an impending sell signal, right? Because the situation is different. Price is going down, not higher. So I just want you, like, it's just important for me to understand, like, if you see a spike in volume, it doesn't mean, like, right away this is an impending sell signal and we need to do something. It just means that likely the organic people that are selling, they're driving the price down. So the market makers become a lot more active, so that they're trying to create the bottom like over here, or to support that the price doesn't collapse too heavily like they did over here. Okay, and then once they recognize they don't need to support as heavily, this is our impending buy signal, just like we've had here in September 21st and so on. Okay guys, so that was another AR7 crypto video. So if you appreciate this content, please subscribe to the channel, because I definitely want to do many other interesting videos like that in the future. Like this video if it gave you value, and also please comment, because it also helps the algorithm. And I would really like to discuss with you, like, what do you think about this tracker? Do you think I should do something better? Do you think it's imperfect? Nothing is really perfect. So if you find any flaws in my analysis over here, please let me know. I would like to debate, because that's how we improve. And I mean, if you find any flaws in what I did here, and you tell me, hey, you could improve that by doing this, I can keep improving this dashboard for anybody who watches this video. And eventually, guys, we can win against those whales, against those market maker whales. My goal is, like, to be here, like, in this particular case, kind of the Robin Hood of crypto, in the sense that I want the retail to be more successful against these market makers that are selling so much. Okay, so the retail has to win also, and this is the reason why I'm making this video public, so that anyone can use this tool and not only myself for trading. So again, guys, thank you very much for watching this video, and I hope you guys have a fantastic week and a fantastic weekend ahead, and cheers as always. Hey guys, not leaving you just yet. I'm recording this video 1 day later for a special edit over here. I received really awesome feedback asking, hey, how are you so sure these are market maker wallets? Maybe these are arbitrage wallets. So I'm gonna explain in this special edit why do I think this is much more likely market maker wallets. But even if these are arbitrage wallets, it doesn't matter at all, and all of the whale tracker is gonna work exactly the same and still gonna track what the largest whales are doing anyway. Okay, so we're gonna explain exactly that. So let's start from the top reasons why I identify these wallets as market makers and not arbitrage, okay, like why I was so certain during the video. So the first part, okay, arbitrage wallets normally buy and sell in all numbers, okay, and not in round numbers. The selling from an arbitrage wallet would be different in almost every single trade, rather than similar round amounts such as 20k, 50k, or 100k. Let me show you that, okay, first in an example of an arbitrage wallet, okay. So this is how an arbitrage wallet would look like, okay. They receive a certain transaction, okay, from a centralized exchange, okay, of a number that could be anything really, because it's an automated bot, right? So they're buying of the actual market, okay, so they can buy a lot less and a lot more, and it's rarely a round number. It's always could be a number like of any size, okay. So they transfer the amount and then they sell it immediately at the same time, okay. So as you can see, every time there's a transfer and selling of different numbers that are not round, that are not ending by 000, okay? So here's another one, and all of the transactions for an arbitrage wallet, this is how they look like. Now, if we go to the market maker wallets, or at least the ones that I identified them as ones, okay? As you can see, over here, the story is very different, okay? Because all of the selling is occurring in round numbers, and sometimes it repeats. It's exactly the same number, okay? 50K, 50K, 50K. Then it's 25K, but again, still exactly round numbers. It's not like 7058.250, okay? So this is thing number one. Reason number two, arbitrage wallets don't keep 6 figures worth of the same 2 traded tokens. They usually have larger amounts of stablecoins and very little tokens. Having 6 to 7 figures amounts fluctuate between each other is a lot more reminiscent of market making wallets, okay? So for that, let me show you again first the arbitrage wallet, okay? An arbitrage wallet would have the majority of their funds in stable coins, okay? They also have BUSD here in these stable coins. So they have 91K out of the total 100 and something K here in stable coins. Then they have BNB, and then as you can see, they have really, really small amounts of tokens. So now let's compare it to the market making wallet, allegedly market making wallet, okay? Over here, they have a 6-figure amount of both Rollbit and USDC. And I just want to mention, like, I'm slightly unlucky with the recording that I'm doing right now, that yesterday when I was recording the video on a Friday, okay, the amounts over here were almost 50-50. USDC was 280K and Rollbit over here was 270K. Now, as you can see, there's a lot more USDC against Rollbit, and there's fluctuations, as we've mentioned, but also Rollbit price went down relative to yesterday when I recorded the majority of this video, okay? So there are fluctuations here, but there are always like the same approximate amount of like 500,000 to 600,000 of Rollbit and USDC. And if you'll keep watching this, and you know, if this wallet won't see this video and will try to modify everything, you will probably see that, but by some point, Rollbit will be again here 50-50, or there's gonna be even more Rollbit here than USDC. So again, from my personal experience, I already saw market makers on chain, okay? This is how they look like. They have a certain amount, 6 figures, sometimes 7 figures, okay, of 2 traded tokens, and then it just fluctuates, okay? Sometimes the token is higher, sometimes they have more stable coins, again depending what do they do with their trading, okay? So again, this is another very big difference from what a normal arbitrage wallet would look like against this allegedly market maker wallet. So point number 3 is arbitrage wallets normally transfer funds in and out a lot more frequently than the market makers, okay? So this is going to be another massive difference here. So as we've mentioned, you see there's a transaction from a centralized exchange and just a sell order immediately, okay, as we mentioned, of the exact same amount. But as you can see, it's super frequent, like you see, like 48 seconds ago, 2 minutes ago, 6 minutes ago, 15 minutes ago, okay? There's always like a transaction, selling, and that's it, okay? Or the other way around, there's a buying on the DEX, okay, or selling, and then they transfer the funds out immediately to the centralized exchange for the arbitrage to occur, okay? This is how arbitrage looks like. Now, when we go again to the market maker wallets, okay, what is happening here, I'm actually going to go to their deposit address to their Rollbit centralized exchange. So check this out. Over here, again, round numbers, always, okay, not like all possible numbers out there, always round numbers, always much, much larger than, you know, like some hundreds of dollars or thousands of dollars, or not even, you see, like most of the time it's like 6 figures amount. And it's not frequent at all. Like you see, there were only 2 transactions, okay, during the last 24 hours, whilst in a normal arbitrage wallet, there were many transfers just in the last 30 minutes, okay? So that is the reason number 3 why I'm, again, more leaning towards that these are market maker wallets. Now, the last thing I want to show is gonna again show like why I think it's market makers, right? But this is also gonna explain why if these are arbitrage wallets, it doesn't matter at all, okay? So this is exactly what it's gonna explain to you. So we're gonna analyze now, okay, the very first week of the launch of Rollbit on the Ethereum blockchain. That was June 28th until July 4th. So the trading in the wallets was 100% selling in 6 out of 7 days. So this is what we have here, and if we go back to the dashboard, you will see it exactly, okay? So this is the first week. as you can see, all of that is like ultra red because they were only selling and almost not buying. So the first 6 days, as we mentioned, right, they only bought here, like on July 1st, just 6% of the volume on that day, which happened to be 10K, okay? And then all of the other days, they literally sold 100% of the amount of the total volume that they had. Okay, and only later they started buying a little bit more. So again, to me, it's a lot more reminiscent of market makers. Why? Because there was a major hype of Rollbit going to Ethereum, and there was a lot more strength to sell into all of that hype. Okay, but again, this is possible that this is arbitrage. So now, guys, let's just look at all of this picture, okay, and think that, hey, let's say this is Arbitrage Wallets and not Market Maker Wallets. So if this is Arbitrage Wallets, okay, and they were selling so heavily during the first week on Ethereum, let me actually show you the exact amounts, okay? So they literally didn't buy anything, right, for many days, and then on July 1st, they bought 10K, and then July 5th, they bought another 10K, okay? So literally during this whole first week, up until the price got to 4.5 cents, more or less, okay? That was like a 2x. They bought only 20K, these arbitrage wallets, let's say, okay? But how much did they sell, okay, total? So by July 5th, they sold $1.2 million against 20K. So if these are arbitrage wallets, what it actually means is that by July 5th, okay, they bought approximately $1.2 million on the Rollbit centralized exchange, okay, from other market makers or some giga whales that were selling like crazy just on the Rollbit exchange, okay, and then they were selling all of that on the Uniswap, on Ethereum, okay? So even if these are arbitrage wallets, they are just reflecting exactly what the market makers of Rollbit are doing on decentralized exchange or some giga whales. It doesn't matter, market makers or no, just the largest Rollbit whales that they have the largest amount of Rollbit and they literally control the price, as you saw in the video. They are selling then just on Rollbit and not on Uniswap, and then the arbitrage wallets are just reflecting exactly what is happening on Rollbit. So that means that the whale tracker, whether these are the market makers themselves and it's tracking them, or it's just the arbitrage that is still doing reflecting exactly what the market makers are doing on the Rollbit exchange, it doesn't matter. Still, it's gonna be super easy to front run them and see exactly what the market makers are doing. So hopefully that helps you. Hopefully it answers the questions why I'm leaning a lot more towards that. I think these are actually the market maker wallets, but even if they aren't, it doesn't matter. Even if these are arbitrage wallets, it doesn't matter because they are just reflecting whatever the market maker is doing, just not on the decentralized exchange, but on the centralized exchange. So hopefully that helped you guys, and again, have a fantastic week and a fantastic weekend again, and cheers as always.